This is one of the most common misconceptions that people have when it comes to buying a house, the belief that you need 20% down to buy a home. Now, I understand why people may think this way. It's a belief that's been around for a long time, and a lot of times it's pushed by well-meaning friends and family members. Some people even heard that lenders require 20% down to even qualify, and that you can't get access to certain loan programs and better interest rates unless you're putting down a larger down payment. And a lot of people want to put 20% down to avoid having to pay mortgage insurance, which is a requirement for any loans with less than a 20% down payment. But the truth is, it's an outdated way of thinking and it's not relevant in today's market. First, let's talk about why these beliefs are an issue. For a lot of people, the idea of saving up 20% down is completely overwhelming, and honestly, it's unattainable for a lot of people. And they've been conditioned to believe that it's not smart to buy a house until you have a large down payment. So a lot of people feel like they need to put off buying altogether, or they're gonna have to settle on a house that isn't their ideal choice. So the people that have this belief are missing out on the dream of home ownership. They're missing out on the wealth accumulation that comes from buying real estate, and they're also missing out on any of the tax advantages that come from owning your own home. But here's the thing, most people don't put down 20% when they're buying a house. The people telling you that you have to put down 20% are flat out wrong. So here's the truth. Most programs require 3% down. FHA is a 3.5% down payment requirement, and then there are conventional loan options that require as little as 3% down. On top of that, there's even programs that can help you out with the down payment and cover a portion or all of your down payment. So you're probably thinking, well, if I put less than 20% down, then I'm gonna have to pay mortgage insurance, and isn't that a waste of money? So yes, if you put less than 20% down, you're gonna have to pay mortgage insurance, and that is an added cost, but that's a flawed way of thinking about it. So if you're currently renting, you're already flushing that money down the drain. And if it's going to take you an extra 2 or 3 years of renting to have the money saved for 20% down, I can almost guarantee you that you're going to pay a lot more money or waste a lot more money in rent during those years than you would have paid with mortgage insurance. Not to mention the lost depreciation and tax benefits. Also, most mortgage programs allow for mortgage insurance to fall off once you have 20% equity. So yes, mortgage insurance is an additional cost, but it can be a smart financial move in some situations. This is something I show my clients all the time. When we have clients that have a large amount saved up, 20% plus, I show them a different perspective that can save them even more money. We look at reallocating a portion of the funds into an investment account or possibly paying off debt that could end up saving you more money in the long run. So when somebody tells you that you need 20% down to buy a house, remember this is an outdated belief and it is not true. There are plenty of options out there for home buyers who want to put less money down, and it's super important to explore all the options before making your decision. Another major concern that home buyers are having right now is high interest rates, and you need to watch this video next so you have a good understanding of how to get a lower interest rate than what the market is currently offering.